It is Wednesday, August 24th, and this is your daily financial news. We are going to jump right into some very hot topics. This is first and foremost a real estate channel, and we got some horrible, tragic, terrible, whatever you want to call it, housing numbers yesterday that we need to go through today. This is around new home sales. So again, this data is new home sales. Now, for context, just so you're aware, when you look at the entire picture of the housing market, single family homes, new home construction makes up about 10% of total transactions. So what we are about to go through is 10% of the housing market, but it is bad. It is bad. So let's get into it and really talk about it, because there's not a lot of good numbers that we're going to look at here. And a lot of it's because of affordability and interest rates and fear and all of these things, but let's get into it. So first and foremost, new home sales. What was the expectation or the estimate? The estimate was for 575,000. If you've been watching my channel for any length of time, you know that the experts have been wrong on real estate. They are always, at least seemingly the last 2 months, they're all behind the curve. They are almost like Jerome Powell in the Fed, in that they are behind. They are not seeing what is actually going on. We on this channel have been a lot closer, but I have to tell you, this number that actually came in was 511,000. That was below my estimate of 525. So again, the experts were 575. My estimate was 5.25. It actually came in at 511. So that is a pretty big miss. On top of that, we have some year-on-year and month-on-month collapses. Let's do year-on-year first. Year-on-year, folks, new home sales are down 29.6%. Negative. If you've been watching my channel, you know I'm talking about a housing depression, a collapse of transactions from 30 to 50%. New home sales are right on the cusp of a 30% crash, and I believe it is going to get worse before it gets better. Not to be outdone, a 29% year-on-year crash, pretty significant. But I have to tell you, the month-on-month number shocked me. The month-on-month number was down 12.6%. I thought my estimate for down 10% was aggressive, and it actually exceeded my expectations. Down 12.6%. New home sales are crashing. Transactions are crashing. But yet there's more stuff going on. Months of supply, 10.9. You hear it all the time. A balanced market is 4, 5, 6 months, whatever you want to call it. Months of supply, 10.9. I think the high in like 2006 was like 11.5. So this is a pretty bad number. But I want to go inside the numbers with you, because if I just stopped here, you could paint a really scary picture. And I'm not here to tell you the picture is not scary. Home builders must slow down. Right? We have a builder in our expert series, Greg Dickerson. We talk to every Monday. He has told you and told me exactly what's going to happen. So inside this 10.9 month supply, would it shock you? It shocked me that 9.84 months, basically 90% of this horrible supply picture is in progress or not started yet. This is not 10.9 months of finished product. There are lots of YouTube channels, lots of news media that's going to scream 10.9 months. Folks, it's bad. I get it. But let's at least be intellectually honest. It is not 10.9 months of finished product. In fact, 90% of this inventory in process or not started. So if you want to hyperventilate because you think there's 10.9 months of finished product, you're wrong. You're not even close. But again, some people are going to sing you a song. It happens to be a song that you like and you want to hear, and you're going to not understand. 10.9 months of supply is a valid stat. It is intellectually dishonest when 9.84 months are in process. They're not done. Builders are going to slow way, way down. In fact, they will not start some projects. But we must continue. There's more inside this. Once finished, new home sales are selling in 90 days. Once finished, once there's a finished unit there. Now for median price. Again, remember, transactions crashed 30%. Transactions crashed 12.6%. We have 10.9 months of supply. Prices have to crash. They have to crash. They have to crash. Well, not yet. Let's do year on year first. Year on year, up 8.2%. Up. But a lot of you don't like year on year because it doesn't tell you the story that you want. So month on month, new home sales, 30% crash, 12% crash, almost 11 months supply. Prices have to go down month on month, Michael. They have to. They just have to. Well, they're up 5.9%. They're up 5.9% month on month. Now, certainly some markets are down, no question. These are national median prices. Again, median is the middle. But again, we are having the transaction crash that I've been calling for. We are. The price certainly slowing down, which is good. It will certainly flatten out, I believe, for years to come. We are heading into the slow season. It would not shock me if month on month goes negative for some of these months, like September, October, November. I don't know what to tell you, folks. You're getting the transaction crash, but prices went up in new home sales. These are the numbers. You can get mad at me if you want, but those are the numbers. So let's get into Las Vegas. Folks, if you're not following John Burns Real Estate Consulting or Rick Palacios specifically, you are missing out. Did you know that it is estimated in Las Vegas, Nevada, that almost half of the transactions are investors? Rick estimates the number at about 43%. That is statistically relevant because markets usually are around 23 to 26%. So to see it skew to 43%, something to watch. Again, Phoenix, we've talked about Phoenix a bunch ever since we interviewed that Phoenix broker who brought us the fact that Open Door has about 15% of active listings. That is a problem. There is real pain ahead in Phoenix and Vegas. Let's talk about earnings. We got some earnings here recently. Intuit, beat top, beat bottom. Top meaning they sold tax software. Bottom line meaning earnings means they were profitable. They also announced a $3.5 billion stock buyback. Nordstrom's, beat top, beat bottom, but lowered expectations. Again, let's remember Nordstrom's. And remember our K-shaped summer? We have been thinking, you and I, that the K-shaped summer was about experiences and travel and all of these things. We're no longer buying cardboard boxes from Amazon and eBay and Etsy. What is it telling us when Nordstrom is pulling back? Are we not going back to the office? Are we afraid for our jobs? I think Nordstrom cutting expectation tells you that the consumer not nearly as strong. Nordstrom's caters to the folks with discretionary income. And when Nordstrom pulls back, that is a problem. Urban Outfitters, another clothing retailer, missed earnings, missed top line, missed revenue, not good. Toll Brothers, real estate. Remember, we kind of have KB Homes, Lennar, Toll Brothers. Toll Brothers is at the top of the food chain. They build the big stuff, the nice stuff. They cut deliveries, soft demand, labor shortage, and contract signing down 60%. Just look here. New home sales down 30%. Toll Brothers told you they're down 60%. What does that tell you? Me? It tells me that the high-end discretionary folks are pulling back faster. Tells me that maybe KB Homes is doing better. First-time homeowner stuff. Again, remember, Greg Dickerson, our Monday expert, tells us builders will pivot. They will pivot fast. They will get rid of the inventory in progress, and then they will pivot. What will Toll Brothers do? They're going to pivot. 60% drop in contracts, not good. Petco, one of the winners of the pandemic. Petco, everybody was getting dogs and cats and other pets. Missed top line, missed bottom line, cut forecast. Brinker International, think fast food. Missed top line, missed bottom line, cut forecast. All right, how about Advanced Auto Parts? Advanced Auto Parts was killing it during the pandemic. Missed top line, missed bottom line, cut forecast. Folks, do we not see a recession? Consumer market, Nordstrom's, Petco, Auto Parts, Brinker, clearly telling us the consumer is retreating. Looks like Peloton has struck a deal with Amazon to sell Peloton workout equipment and clothing. That is their first partnership of likely many to come. Mortgage apps. Mortgage apps are down 2% for conventional, but up 4% for government-backed low down payment. If you've been watching my channel, you know that I believe FHA and VA buyers finally have an opportunity to participate in the housing market. The last 2 years, it was horrible, nearly impossible for a low down FHA or VA buyer to participate. That is changing. And you are seeing mortgage apps for those programs up 4%. If you are a real estate agent or a mortgage broker, you must diversify. You must reach out. You must learn FHA, VA, 203K loan, first-time homebuyer programs. We are still going to do millions and millions of transactions. We're not going to do 7 million, but we might do 4 million. The housing market doesn't stop. We've just gone from going 100 miles an hour to 40. We just got to go the speed limit. Last thing to talk about, we want to talk about home prices. According to Zillow, San Jose, California crashed 4.5% month on month, June to July. Phoenix down 2.8%. San Francisco down 2.8%. Austin down 2.7%. And Raleigh, North Carolina, 2.5%. Remember, Zillow numbers are existing home sales. These numbers are new home sales. Existing is 90% of the market. New home sales, about 10%. Again, folks, we are seeing a housing depression. It has not rippled into prices. I will admit, a 30% crash in transactions, I would have thought it could have very easily been a negative number. It is not lost on me that we had a 12% crash in transactions, but prices still went up almost 6%. That's just weird. Isn't that just weird? It's kind of weird. A lot of that probably has to do with inventory mix and how median is calculated. Folks, have a wonderful day. This is your daily financial news. Like, subscribe, comment. Take care. Bye bye.